By the end of this video, you're going to know exactly how midterm election years have behaved in the past, especially about S&P 500. Let's go to TradeWave. So I selected S&P, indices common. I'm going to type SPX. It's 2026, so we have 98 years of data. And I'm going to select buy and hold. Buy and hold is showing us that 69% of the last 98 years, the year has been positive from first day of the year to the last day of the year. And 31% were losers. But that doesn't really tell us much. I'm going to switch to midterm election years, or in the world of TradeWave, P+2. Now we see from beginning to the end of the year how markets behave. In the past, let's see, in the past 24 midterm election years, the market's been 54% bullish and 46% bearish. So it's pretty even. However, if you see, it starts rising after October. So we actually want to know what's happening now. Let's first take a look at first quarter. Ooh, history of first quarter now looks more negative. As you can see, the first quarter is 54% of the years are actually negative. How do I know it's negative? Look at that red square right there. TradeWave indicates if a certain date range is a short or a long opportunity. As long as more than half of the bars, half of the years are red, it shows red, and if half of the years are green, it shows green. Half or more, I mean. So as you can see, it looks pretty volatile. This year so far, we're up 1.74% for the year. 2018 and 2022 were negative 5%, 4.23%, 3 positive. The last time there was a big move was 1998, 13%, and 1986 was 12%. The rest are negatives. Now, let's just look at these since 1962 and cut 7 of these years down. So I'm just going to change this 24 to 17. That's so we can actually see it better, and that's pretty much more relevant, I would say. And we get midterm election years since 1962. As you can see, 65% of the years are negative. And look at this. Trend chart is showing us a major down move going into here. And trend chart shows the average trend over the years. Look at this. 71% of the years have been negative since 1962. But this year, we are up 1.74%. What happened with the other years? As you can see, now this is showing us the gains for the year. And see, look at 2018. It went up 6.57% and then closed negative. 2010, it went up 1.54%, then closed negative. Is it going to close negative this year? Well, right now is 29th of January, and we just have a handful of days left until 4th of February. Unless market drops sharply, this is going to be an anomaly year. Look at the next one up. It's also a very sharp move. So historically, this date range from the 4th until 18th of March has been long, especially since 1986. Although in 2022, it went down 0.83%, but it had dropped even more, 7.74%, and then closed 0.83%. So there's definitely some bullish winds behind this. Also in 1982, it dropped 10% and then closed 5.26%. So these periods are potentially bullish based on history. But look at this now, right around here, right at the beginning of spring, there's a move down sharply going all the way to here. During this period of time, market's been down 59% of the years. What if we also click here to see the extent of the move? So even like 2018 that was flat, it dropped 6% first and then closed flat. Dropped 3% first and then closed positive in 2014 during this period. So what does this tell us? This is telling us that during this period, market is vulnerable. Is it going to go down for sure? No, market doesn't owe us anything, but the probability of down has been much higher than other years during this period of time. And now if you look at fundamentals, for example, how incredibly expensive the market is, chances are the market could follow through right here. Let's also go further to about here. It still shows quite a bit of negative. And as you can see, for example, it only dropped 3% in 2014. 2014 just was not very volatile year. 2018, during this period, it wasn't super volatile. First it dropped 5.87 and then went up 7.8%. So these are the markets, actually segments of the market based on the trend chart. But now I want to show you the big one. You know, some of you have read my book, The 100-Year Pattern. I named the book after this pattern I discovered, which has never been documented. And I already saved it, so I'm not going to manually type it in. Let's rate this one. Look at this. To this date, every time I bring this up, it just blows my mind. Starting on the September 27th of the midterm election years, for 295 days, until July 18th of the following year, the market has been up 100% of the time after 1930. So in the middle of the Great Depression, this didn't work. Dropped 23%, and it's never failed after that to become bullish. This is like the most bullish time of S&P 500 in a presidential election segment. So this is a big deal. I think the market would be, S&P 500 would probably be pretty weak until September 27th, and then there should be a good wind behind it. Now, does it mean it's going to be green this time too? Well, the probability says chances are high, very high, for it to repeat this. However, what if it closes down this year? If this closes down, this is the biggest notification that chances are we have fallen into depression. because this has not dropped for nearly 100 years, since 1930. And if it drops this time, something significant has changed with the markets. Now let's take a look at a few stocks. There's a new feature in TradeWave. On the data analytics platform, on the left side, opportunity table, there's a new checkbox called, well, this year is a midterm election year, so it says PE plus 2. Finds patterns based on PE plus 2. I am just going to select S&P 500. So this is based on the 505 stocks of S&P 500. I am going to select 10-60, which means I want to look for patterns that are at least 10 days long and at max 60 days long. Now we get a whole bunch of patterns, and this is based on last 10 years. You can change that too. You can basically look at that last 15 years. Nothing comes up last 15 years. Oh, that's because it's 15 of 15. None of them have performed, was profitable every single year, 15 out of 15. But I can also click on 14 out of 15, which means you're okay with at least 1 year failure. And now we get, what, 13 opportunities. The first one, booking holdings between today, which is 29th of January, until February 16. Booking holdings has gone up 93% of the years, or 14 out of last 15 years. Now, let me show you the more fascinating part. I'm going to go back to 10 years. And I am going to click on PE plus 2. Now, when you click on PE plus 2, and you have selected 10 years here, that means find patterns based on the last 10 midterm election years, not the last 10 consecutive years. The first one comes up is LHX. This is L3 Harris Technologies. And look at it, they're 4 years apart. These are all midterm election years. It's done quite well during this period, today until 23rd of February. Look at the average gain right here. 6.59%. Boeing, another bullish period for Boeing, right here, based on last 10 midterm election years. Today until 18th, pretty close to the same. WR Berkeley, also very bullish. I don't know if you have noticed something very interesting in trend chart. If you understand what these trend charts are showing, you would be pretty fascinated with what we just are seeing. We're having a sharp up going to around beginning of spring on many of them. Look at that. These are average trends going up to beginning of spring, about here, beginning of spring, and then they go down. This one starts going down in the middle of June, Boeing. Again, look at this. Beginning of June for WR Berkeley. This one, beginning of spring. This is AON PLC. I don't even know how to say it. Another one, look at this. Beginning of June, Granger. What is this telling us? This is telling us the summer is going to be ugly. This summer is going to be ugly. Oh, this may have stopped trading. Yes. Micron, same thing. Look at that. 318, it peaks, and then it goes down sharply. I mean, let's just take a look at one of these. This is based on the last 10 midterm election years. So I'm selecting this downtrend, and what the selection does, it just changes the date range, the start date and the number of days. You can just do it manually also. Look at this. Micron's gone down sharply. During midterm election years, it was pretty flat on 2006. It closed up 10% in 2014, but rest of the years, this is a 30% drop from beginning of spring until middle of October. Wow, I actually hadn't noticed that being that high. This is a major drop. Any more than 10, no, there are only 10 midterm election years, which means there could be as many as 40 years, because if I switch this to consecutive, we should be able to select up to 40. 41. But when you look at consecutive years, it doesn't show that, although it's still a lot of negative years in the summers for Micron. But it's a lot worse when you go to P plus 2. Major drop. Here's Regions Financial Corp. Another up. This one is not straight down but volatile. So this one's actually not as consistent as the other ones we just looked at. But if we change this to 90 and make this 30, we get a smaller list, but look at the first one. ConocoPhillips has a sharp up going today until April 18. Average 11%. Now remember, companies like ConocoPhillips are not very volatile. So if you are using options to trade, usually options are not as expensive as like Nvidia or Apple or Amazon, which are a lot more volatile. If you find a stock that's going to make or has a chance of making a big move, but it's not typically volatile, you can find cheap options, and cheap options make huge moves. Now, also look at the probability line. Right now, we're scanning for last 10 midterm election years because I checkboxed this, and it has to be profitable 10 of the last 10 midterm election years. We can reduce that to 9, which means I'm okay with 1 year being negative, which is a 90% probability. And look at the bottom. It went up to 61 opportunities. When it's 10 of 10, 8 opportunities, 9 of 10, 61. Second one is Caterpillar. Another sharp up, and it has the same signature as the rest of them. This one starts from mid-April and goes down sharply. Midterm election years, right there. Look at that. Even 2010, that was negative, it drops 15% and then closes up 24. This is your drawdown for a short, which is, I mean, this is your drawdown for a short, but I mean, I would have made money on this one this year also. Here, dropped 9% and then closed up -1. So Caterpillar has a very interesting negative time right there. We already saw Boeing. So what if we start looking at beginning of, let's go to April. April 1st. And look, if I select 30 to 120 or maybe 10 to 120, no, let's say 22. I'm just going to go to 10 to 90. 59% are long. Look on the bottom. Right there. Whenever you change a filter, look down here. It tells you how many opportunities it's found. It also tells you how many are long, how many are short. If I go to 10 of 10, McDonald's, a 34-day opportunity from April 1st to May 4th. Look at this, McDonald's also has that signature down. This one's starting July, middle of July. Progressive, an up and a down. Oh, this is a good one. Look, Chevron has this strong up over here and then pretty sideways. So right here between April 1st and May 14th, it's pretty good. By the way, you can do this on a daily basis. That's the whole point of this opportunity table. It finds these. So let's go to May. May, look at this. We only ended up with 3 opportunities, 10 of 10 years. And Caterpillar, 10 of 10 years short. Average drop of 9.26%. That's from May 1st to July 27th. Parker Hannifin, another short every year. But look, this one's actually more interesting. Do you see this average P? The average P is based on, in this case, since this is short, all of the red part. The TWA, or trade wave average, it's based on red and the pink part, which is the extent of the move. Not the close, but the extent of the move. So this is the lowest it went and then closed here. So a lot of times you can target these. You just have to come up with a strategy that targets your moves. And General Mills, it's positive. Now switch to 9 of 10 years. Well, we end up with 29 opportunities, 9 of 10 years, between 10 and 90 days. I'm going to look at it by TW ratio. Trade wave ratio is like Sharpe ratio, but it uses both of the, for example, for longs, it uses the dark green and the light green part together and then calculates Sharpe ratio. So I already looked at Caterpillar short, but let's look at Valero Energy. It's pretty consistent down. Failed in 1990. I mean, actually went up, but here. All these midterm election years went down. Lennar. Another down. Look at this. Same signature going right here. If I click this button, then we're going to see it from January 1st. So you can see it looks like many other ones we saw earlier. We get this down, up, going to beginning of spring about 329, and then a down starts. Summer of midterm election years have a high probability of down. Oh, this is a good one. Advanced micro devices. Look at the strong down you have on midterm election years. However, AMD also has it for all years. So if I switch to, oh, actually it doesn't. Look at that. I just switched to last 10 consecutive years. It became bullish. If I switch to last 10 midterm election years, it's bearish. Which one would you pick? I would bet on this one. Well, in my case, I think this is more relevant. Advanced micro devices is behaving down for midterm election years. Oh, here's another very cool one. What's the most valuable company in the world? Look at this. Nvidia, the company, first company that ever hit $5 trillion, has a midterm election year down chance. Again, first day of spring, going to July 31st. This is all the data we have. So I think they went public on 2000? So the company's been around for 26 years and they're worth $5 trillion. Look at what happened. In 2002, they dropped 77%. However, in 2002, Nvidia was not an AI company. They just made display cards for gamers. 2006, it dropped 12, also went another 11, so dropped 30%, then closed down 12.81%. 2006, when they were just started dabbling in AI, when some of the big professors realized they could use those display cards to train AI models. So that's when they started their AI adventure. 2010, they were an AI company, but those days AI was not as big as it is today. They dropped 47%. 2014, definitely AI, they dropped 5. 2018, very AI. They dropped 1.43 and an additional 14%, but they closed down 1.43%. In 2022, I think that was the year that ChatGPT came out. They definitely were an AI company. They dropped 31%. They closed down 31%, but went another 16%. 31 and 16, 47% drop of Nvidia. What are they going to do this year? Now, imagine this. What if Nvidia drops 80%, like they did in 2002? What would happen to the company? They would be $1 trillion company. Is that conceivable? Well, I think they're overpriced, although they have an incredible revenue stream. Just incredible. I don't see it being sustainable. They have so many competitors that are coming to the market now, including Google, having this incredible competition, AMD, Intel, several Chinese companies, but the market is also expanding like crazy. So, is Nvidia going to drop? My guess is that they're going to drop and eventually they're going to recover. How much are they going to drop? No idea. But during this period, they've been vulnerable in midterm election years. Between first day of spring, March 21st, until July 31st, for the last 6 midterm election years. Chances are they're going to show some drops, but I see it recovering afterwards. Nvidia, if Nvidia drops 50%, they're going to recover a good portion of it eventually. But when? We just saw. Remember, the 100-year pattern date range is going to have implications on the overall market. It's been doing it for nearly 100 years, since 1930. When it failed, it's never failed before, after that. But this is how I see 2026. I'm pretty bearish on the market till end of the summer. And then I am pretty bullish going for the next 295 days until July 2023. And this is just based on what the market has done in midterm election years for the past nearly 100 years. Just one other thing. You must have heard about sell in May and go away. I have a section in the book about this. I did extensive analysis on that one and found out that sell in May and go away is wrong. The probability of the market behavior, basically market behavior, is statistically the same as the rest of the year, except in midterm election years. And this is why. Well, those first people that came up with this, like Yale Hirsch, and what came up in, I think they actually started in Europe first, they didn't have the same level of analytics capability as we do now, at least with TradeWave we do. So they thought it's the effect of the summer. It's not. It's the effect of the midterm election years. The rest of the year, statistically the same. Summer is not a time to be out of the market unless it's midterm election year. So, by the way, a few of my friends have asked me, what should I do this summer? Because I've told them about this. And they've read my book. I'm like, I can't give you advice about what to do about your retirement and all of that kind of stuff, but the historical probability shows that there's a chance of market going down. A good chance of market going down. If I were you, I would switch to gold or something safe for the summer and then jump back in end of September, beginning of October. Worst case scenario, market's going to go up and you have lost some gain. But probability based on history is with the market going down in the summer. So that's it for today. I will have more information about this as we go through. I've been busy on the 2026 version of 100-year pattern. That's why I haven't posted the video. But I will. 100-year pattern 2026 edition is close to be finished. Have a good weekend and hope you guys subscribe. If you have if you have listened to this to the 34th minute, you'll probably have already subscribed. But have a good one and a good weekend.